Banking, Credit, and Housing Issues by Diana Parra. Banking Problems and Issues. Banking Problem and Issues. Raising bank fees, ugly fees and penalties for bouncing checks, overdraft protection fees. Bank hates credit union and customers love them. Rising bank fees. The banks usually have an annual fee. Credit union is the only one that doesn't have a lot of fees. And then ugly fees and penalties for bouncing checks. There is a fee when you have a bouncing check. The real cost for them is $10, but the banks are charging us up to 25 and 30. And then overdraft protection fee. In all of the banks, there is an overdraft fee of 35. And then why banks hate credit union and customers love them. Customers love credit union because of they pay a high interest rate and have low loan cost and assess small fees. Saving and loans scandal. American consumers should be incensed, angry, and outraged that the costs for this fiasco are being paid by them through high banking fees, reduced interest rate earned on deposit, higher process on loans, and higher income taxes. Deregulation of banking is hard on customers. Customers have to shop for good interest rates, also low and moderate income families and small business face less access, few choices, and higher fees. Unbanked consumers, the people that are usually unbanked, are millions of adults, especially poor immigrants, Black, Hispanic, non-English speakers, and many other consumers do not have a bank account. And I could relate to that because I know people that doesn't have that it's Hispanic or immigrant and they don't have any ID or any documentation for them and they cannot open a bank account because they ask you, that's the first thing that they ask you for, and they don't have one. So how can they get one if they don't have any ID to open one? It's really hard for them. I have seen a couple of them that they want to deposit money to a friend and they can't because they usually ask you to deposit the money to your account and then transfer it to another person. But how can they do it if they don't have an account? So I think it's hard. It should be, I think they should accept another kind of ID or Mexican ID or whatever ID they have. That should help people that doesn't have an account. And like I told you, and bank customers, they do not have enough money to open an account and meet the substantial minimum balance requirement. Uh, they lack personal identification, like I already told you. They lack a credit card. They believe they won't write enough checks to make it worthwhile. They lack math, mathematic mathematic and reading skills. The distance are too long between the institution, office, and work or home. They believe banks have high service charges, and some of them do, and they mistrust financial institutions in general. And like I said, they don't have an ID, or like it says in here, they they don't trust people from the banks handling their money, or like usual they ask you to open an account with an amount of money, and some people like don't have that amount. Um, they don't know how to read the in English, or they live too far from the bank, so might as well just keep it at your house. And it's true, some of the banks charge you a lot of money to keep your money in there. It has happened to me that they have charged me this fee for not using my card, or not putting a specific amount of money into my account. And then need for basic banking, a safe and accessible place to keep money, a way to obtain cash, a way to make payments to third parties. They say that it would be hard for them to keep a basic banking because it would increase their costs substantially, and there would be a high risk of fraud. Well, it would be convenient for all the customers to have an easier way to obtain our money. For example, when you go to a bank and when you go to an ATM and this, they don't have your bank in there. So they charge you a lot of money, or like $3 or $4 to take out money from your bank, from your account. So you end up getting charged for something that it should be free. That's what I believe. Because it's your money, it's your bank, but not all of the stores have the ATM for your bank. So that's not good. And then credit problems and issues. Credit problems and issues, aggressive credit card solicitation. There is always credit cards sent to our houses by mail that are offering you credit cards that said, "Congratulations, you have been approved to so and so many money. Just give us a call." There is a large percent of cards that are issued by this kind of credit cards. For example, Visa has 51% of those accounts. Master has 35%. Discover has 10%. American Express has 5%. There is a large population of students that use credit card. It all depends on the grade that they are in. And it's true, because as a college student, we are poor and we don't have that much money to spend, and if we are working and we could pay it later, it's easier for us to go buy our books, buy our whatever we need for school or for our house, for our apartment. Just buy it on credit card and pay it later. It is hard, but as soon as it's working, as soon as it is giving you whatever you're needing in that time, but it's hard because at the end, I know we are paying more than what the price we pay at first, but that's how it works with us college students with the credit cards. And then poor public attitudes on credit card use. There is a misunderstanding because people or consumers think that it is their right to have credit. They also think that all credit is good, but only if the bill is paid in full soon after it arrives. It's good. So in that point, I think I was misunderstanding that too, because as a consumer, I thought that the longer you take to pay the amount back, the better the credit was. But then in here it's explaining that to have a good credit, we need to have we need to pay the full amount in a certain amount of time. So it is interesting to know. And then buying on credit, it's a negative sale. Paying with credit, you can end up paying more than what you paid at first. Might as well pay first in cash and not credit. And like I told you before, I think that's what's happening to us, or especially me as a college student, to be paying my books with credit card if I'm gonna end up paying more than I did at first. But some of us don't have enough money to pay that amount of money at first in cash. So that's why our second choice is paying with credit card. But it's interesting to know that we are paying more than what we were supposed to at first. And then credit cards company can legally change your contract agreement after you buy. They can charge the they can change, the contract agreement whenever they want. They always need to give a 15-day notice, but they can do it anyways. They can higher the interest rate but never lower it. And that is interesting too, because who would you who would think that, well, I never thought of that they could change my interest rate if I have it so and so amount or so and so percent. And now I know that they could just change it and let me know within 15 days first, and they would do it, but then I could not do anything because they are gonna do it anyways. The only thing that I think I would do is go pay, but what if I don't have the money? So that's bad. And then late fees penalty interest rates and overcharges. There is always a big misunderstanding because they can do whatever they want whenever they want. They only give you or give us a 15-day notice, but you cannot do anything about it because, like I told you before, they just can't do it. And the only thing that it's legal, they only can send us a letter telling us whatever decision they are making or whatever they are doing to our account, they're just gonna do it. They're not gonna care if we're gonna like it or they're not gonna ask us if we're gonna like it. They're just gonna do it. They're just letting us know what's gonna happen and the amount that we're gonna pay. And then the low minimum and monthly payment trap. Many people ignore that while you are paying the minimum of your debt, you are paying more and also the interest rate goes up and it takes longer for you to pay. For example, I know it's bad, but I have been paying my credit card for I don't know how long, and now that I think about it, I have been doing it wrong because for the longest time I was paying the minimum because I thought, okay, if it's asking for that amount of money, it's because it's gonna do it for that amount of time. And no, I have noticed that my account has never been going lower. Like it has always stayed in the same spot. So from now on, now that I learned this, I'm gonna do a higher payment so I could get my credit balance in zero from now on. And then grace period ripoffs. It's not always good for the customer to accept the grace period because you can get in more debt with the credit card. They have plans where you can skip a month, but then if you accept, they can still charge the interest rate and will result in more charges. They will charge you more if you approve the grace period, right? The grace period, because I believe that it's like if you accept to skip a month, they will skip the month, but then they are gonna start charging you from that month on. So it is kind of weird, but for the banks, it's getting you into a trap, like it's saying in there, and then making you pay them more than what you were supposed to. And then 2 cycle ripoffs. That is always good to read the little print that we never read because they are too little. And we think that it's nothing important, but in reality it is important. They are giving an example that if you pay $200 each month in the same day every month, they can get an interest from $3 to $9 that you can end up paying more than what you were supposed to. Like what I understand from that, it's that they will, you can be paying every month 2000 $200, and the bank is gonna skip a day, and then they're gonna charge you more because you're paying that amount of money. Card blocking may create problems. You can get a They can block your card like in a store, and they could put a hold on your card because they want the card to have funds whenever they need to do the transaction. For example, when you rent a car, they they don't know how many mileage you're gonna put on, or they don't know how long are you gonna take. So if for example, the amount of money that you need to pay is 200 and you have 300, they are gonna put on hold your card. So you need to be paying more, because whenever you want to do another transaction, you're not gonna have enough money to do that transaction because they're putting on hold your card. Rule of 78, prepayment penalty. It is a financial charge that they do to all of the charges that they put into the borrowers who paid off an installment loan early. They say that the customers pay more when they pay the loans early, but when the customers pay the loan in the year that they are supposed to. Fixing mistakes in credit cards files. There is 4 out of 5 credit reports that contains errors, and those files contain serious errors that is unfair because they are doing denials of a vehicle loan, also home mortgages, vehicle insurance, or a job. Bankruptcy is a new bankruptcy law. Bankruptcy is a constitutional gratitude right that permits people and businesses to ask a court to find them officially unable to meet their debt. When the petition is granted, the majority of assets and liability and the person are then divided by a trustee and used to repay as much of the unsecured debt as responsible as reasonable possible. There is a new bankruptcy law that was passed by the Republican-controlled Congress, and it's not law. There is a new requirement and expected to affect only 10% of people seeking bankruptcy. Housing problems and issues. The high cost of housing in America and the subprime and predatory lending, discrimination in credit, housing and insurance, redlining in credit, housing and insurance discriminates. The high cost of housing in America, its average home sold in the United States, it's more than $178,000 average price for single families in the county of California are above $550,000, and the median sale price in a home in San Francisco is $600,000. $1,000, and there is the least expensive geographic area in New York. The median sale price is $80,000. Also, there is a large amount of 80% of households under age 25 that the rent compared with only 19% of those persons aged 55 and 64. The subprime and predatory lending. The subprime loans are loans at interest rates above conventional, and the lender expects about 50% of their loan to default. For example, in the mortgage rates, we where 6% and subprime mortgages lender rate might be 9.5%. And then predatory lending, a subset of the subprime industry, is the exploitation practice of ripping off consumers by charging excessive amount of money for credit. And then discrimination in credit, housing and insurance is action on the basis of bias or intentional prejudgment. It is illegal to discriminate in credit financing as well as in many areas of housing and employment. Various laws prohibit discrimination on the basis of race, color, religion, national origin, gender, sexual orientation, marital status, age, disability, and all that. Creditability is a crucial concern, particularly for low and moderate income consumers. Redlining in credit, housing, and insurance is refusing to sell consumer products such as insurance, credit, or housing in certain households, or charging such high prices that poor consumers are forced out to certain markets. Appraisals are regulated but not the average consumers. The federal government largely exempts the need for the appraisal on loans less than $250,000 and the amount of 80% of all loans. Mandatory default disclosure laws. Defect disclosure forms aim at detailing what sellers really know about the condition of the house when they are selling it. Agents should disclose to buy whom they present. The agency is hired to sell the home for the seller because the seller pays the seller's commission. Bargaining is necessary to reduce sales commissions. The traditional provides that real estate agents earn standard 6 or 7% commission when selling a house. Kickback fees and upcharges. Kickback fee is a payment to a person able to influence or control source of income, often by conditional arrangement. And then escrow ripoffs. Payments are monthly prepaid made by a homeowner to a lender to accumulate and later be used to pay the rental, estate property tax, and homeowners insurance on a property. In conclusion, I believe that this has scared me, and I will pay more attention to whatever I'm gonna do with my credit cards whenever I buy a house. This is my reference, and thank you.